T-10 to showtime. On my mark, roll intro and mark. Camera's ready. Camera 1 check. Camera 2 check. Audio. Roll guest package. Action. The views and opinions expressed in this podcast are those of the individual speakers and do not necessarily reflect the official positions of Visa or the speaker's employers. This podcast is intended to provide general information and should not be considered health, legal, tax, or financial advice. Todd, coming to you in 3, 2, 1, action. This is Policy Sandbox, a collaborative space for ideation at the intersection of payments, commerce, and public policy. As always, I'm your host, Todd Fox. The world is an increasingly volatile, uncertain, and fragmented place. So I invited some of the top thinkers in global finance to scan the horizon and help me navigate around emergent risks. One lesson from these conversations: connectivity equals value. Welcome to Policy Sandbox. I'm here with the chairman of the Visa Economic Empowerment Institute Advisory Council, Dr. Axel Weber. Axel, you've been at the center of so many of the major moments in international finance, going back even before the global financial crisis. But during the 2008 crisis, you were the governor of one of the G7 central banks. You've been part of the post-crisis rebuilding of the global financial system, much of that time at the helm of UBS, where you were the chairman for quite a significant amount of time. You were the chair of the Institute of International Finance. And now we get to work with you as the chair of the Visa Institute. We're going through a moment that some people have likened to the end of the Cold War. Some have said it's like COVID, but twice as uncertain. People are feeling a little nervous right now. They need your advice. So let's get into it. How do you size up the current moment, both from a geopolitical perspective and a markets perspective?
So you're absolutely right. If I were to characterize this moment, we are almost at an all-time high of uncertainty, measured almost by any index, whether it's the IMF or others, 2 times COVID. That's where the measure is. And so in a period of high uncertainty, what people are looking for is guidance. And that's, if you go back over history, public institutions that are embedded with trust, whose operations are driven by trust of populations in what they do and their mandate, are becoming key organizers of a coordinated action rather than everyone doing, in a very uncertain environment, what is best for themselves. I experienced that during the financial crisis, where we at the central bank, in normal periods, we would basically take care of inflation. And credibility and trust in central banks to deliver on their mandate was core for us being successful. In the crisis, we became even more important because we needed to coordinate a lot of the banks who all were following their idiosyncratic first best strategy for themselves. And it was pretty clear to us that the sum of these activities would not end up with something that was best for society. It could have actually accelerated the crisis. So the central banks and the regulators took charge in coordinating the interests of individual players to something that was closer to the best public good, the best for everyone, rather than the best for individual institutions. And also, when you are in a financial crisis, the downward spiral can really strongly accelerate if everyone sort of sells assets into a falling market. So you needed to convince institutions that we just jumped into the water, we'll get out on the other side and it'll be okay. And we as institutions have the tools, the means and the determination and the credibility to organize that with you and for you. And so inspiring trust and taking the helm of coordinating individual actions because they trust you is very important in a crisis. And I think at the current moment, we talk a lot about sort of leadership. We talk a lot about, what we're seeing is democracies are having problems because decision-making is complex in an uncertain environment. And people are looking at more autocratic structures for guidance. In democracies, it's democratic institutions that need to step up to their mandate that they were given to fill that void of a lack of trust and, an increase in uncertainty, because that's what populations look for.
Well, certainly There is a crisis of trust. I think that's obvious. It shows up in the polling in many countries. You're a native of Germany, certainly in the United States. There are questions about whether the traditional institutions have failed large swaths of the population, and they're turning toward populists, although potentially we're seeing that populist wave crest, and maybe we're moving in a sort of post-populist era. But the corollary to that on the international side is this movement from a very unipolar world to something much more multipolar. Multipolar worlds tend to create friction and conflict and risk. So you've not only led the financial institutions and the economy of Germany through a financial crisis, you've actually navigated the Euro crisis, both as a policymaker and a banker. And then you've really been central in helping international organizations think about how they can stay relevant in a world where there's this counter pressure from regionalization and deglobalization. So I'd love to get your sense of, are we really in a multipolar moment? Is this an inflection point? Will we ever go back to the old days?
Yes, we are in a moment where basically because of uncertainty, people are focusing a lot more on their own perimeters. When I started in finance, which was back in the 80s, the global economy grew by something like 6% on average. And every decade we took a step down from 6 to 5, from 5 to 4, from 4 to 3, we're currently at 2.5. The trend continues to go down. And when the pie doesn't grow that much, it's all about redistribution of a less global growth. And if you at the moment want more than 3% growth, you need to turn to emerging markets. You look at China, you look at India, they're the only countries that still deliver 5 or 7% in China or India respectively. So what countries have done in the current environment, the US has focused on its own America first. Our ambassador Koji, who is a member of the advisory board, tells us the Prime Minister came in with a Japan first mandate. You have the MAGA movement, Make America Great Again. That all means we're moving levers in the direction of focusing inward on our own perimeters, rather than, and that is easily forgotten, respecting and appreciating the benefits we all went through globalization. Because we brought millions and billions of people from poverty to a better living over all of these periods where growth was declining. But declining growth is just a reflection of improved well-being in terms of levels of engagement and well-being of individuals. So I fear very much that the lesson of fragmentation, inward looking, take the new Global South division. These are the countries that form a new group because they grow more than the mature world. And China has been an example of lifting a country out of, pretty much poverty into being the second largest, most dynamic world economy. So we can do all that, but we shouldn't forget that the first best solution is a global solution. Visa is a global payment company. UBS is a global bank. Central banks, the network of central banks is globally very aligned. So in a crisis like this, where trust and uncertainty are high, to go back to my previous example, in the public sector, it's the central banks and the treasuries that have a lot of the coordination in the crisis, in their mandate. Because crisis is not a one-off thing. We lived and grew through repeated crises. You can inspire and have the trust of all your clients. And when things get tough, people turn to the specialists, whether it's the central banks for inflation, whether it's the UBSs for wealth management, or the Visas for payments. And the biggest risk we have is that in that moment where clients look to us, we fail to provide that trust and to prove us worthy of that trust. And that's why I think central banks always grew in reputation when there was a financial crisis and they got on top of it. If people trust in you that even inflation, if it is high now, we will get it down. Even if the going is tough at the moment with financial markets correcting and going down, we have given you the best investment opportunities globally. Even if payments get fragmented, we as a global network at Visa provide you with your ability to move your money around the globe in a pretty unhampered way, because we have global networks.
That's right.
And whilst the world is fragmenting, it's not fragmenting our rails. And so that trust is very important. And I think it really separates, to end on that, it separates the top players from those that are aspiring to grow but don't yet have the global networks. And that's where I think, in particular in a correcting world, with multipolarity, the connectors between these multiple poles, whether it's in investing or in payments, or in central banks connecting sort of, the public sector, or the G7 or the G20 connecting the countries and their politicians. The connectors are more important in a fragmenting world than they were in a very connected world.
I would say amen to all of that, and maybe just add on, the multipolar world is not necessarily inconsistent with global networks. It's just much harder. And one of the things that makes it hard, we're not fair weather friends, meaning we're not only in Latin America when it's convenient to be there. We're there for the long run. And the business that we run in these markets is actually extremely local, very tailored to the unique circumstances. The ability to embed so deeply in the local market and then abstract away the friction so that it feels to a seller in that market when they receive payment from abroad as trusted as a domestic transaction with someone that lives right next door. That's a very powerful value that global networks can provide. Slightly different twist on this topic. We're also on the cusp, not just of a geopolitical earthquake, but actually of a technological earthquake. Some of these technologies also breed uncertainty, but one thing that we can be fairly confident about is that things like AI, blockchain, they have the ability to radically lower the barrier to entry to becoming an entrepreneur, even in developing countries. Mm-hmm. I worry a bit that in this geopolitical moment, the technology benefits will accrue to the large, mature economies where there's already a large and installed user base, and that regulatory barriers may restrict access to the very technologies that most benefit the global south. Is this something that you've been picking up on as well?
Yes, I would say you're right. If you have a massive technology disruption like AI, agentic AI, autonomous AI agents that can do whole jobs and replace people skills, you get a much more added uncertainty. And so we need to deal with that. And when I talk to people here, or when I travel globally, you get one feedback. The feedback is, and you look at the Draghi report for Europe, it's clearly in there, whether it's quantum computing, whether it's technology, whether it's investing into AI capabilities, CapEx investment by the Magnificent Seven, the US is at the forefront of having the companies and the technology that will lead to these changes in technology. The other country, talking about DeepSeek moment, is China. So the two major economies that are a bit in a standoff with each other, with a sort of America first and China, I would say, that are the two players that are developing these new technologies. If you look at Europe and AI, we have Mistral, which is one of the European AI companies, but we don't have much beyond. The Draghi report clearly defines Europe as being back. So in Europe, the discussion on displacement and AI is mingled up with the fear of American dominance or Chinese dominance in the future, because that's where these technologies are related. It's much less a AI-focused thing. That is there, but we know those technologies are not at the forefront of Europe. Where here, you get a much more direct impact on society.
I have to say, I sometimes hear this story about how Europe is falling behind in AI or other aspects of technology. And then I think to myself, how many of my friends in Silicon Valley are actually from Europe? A lot of them.
Absolutely.
Who invented or created this amazing OpenClaw AI that came out at the end of last year and really changed the game for a lot of the tech startups? I believe it was an engineer from Austria. If you think about a company like Stripe, two brothers from Ireland. So I don't think Europe has a problem with talent, but actually maybe you would be the better person to answer this question, because although I didn't mention it in your intro, you've had a very successful career as an academic, and you are the head of a major institute at Goethe University of Frankfurt. So you're also very immersed in the youth of Europe, and maybe that's a great place to go next. Are the skill sets the problem, or is it some deeper structural issue that makes people that have this talent congregate around certain hubs?
Yeah, no, look, you're absolutely right. I work a lot with fintechs at the moment because I think that is where the new dynamics is. And all of them have moved to the US because risk capital, funding in early stages is just much more available here. And then with Silicon Valley, look, if you have a talent pool lives of innovation. And innovative people want to be with other innovative people. They don't want to be isolated.
Yeah.
You look at where European Silicon Valley is, it's not a single place. I work with fintechs in London, Berlin, Amsterdam, Paris, Munich, Milan. European complexity is also there when it comes to these new technologies. And on top of that, if I'm in the US, I have a deep capital market, I have venture capital, I have private equity, all forms of funding, including seed funding at very early stages. In Europe, that market is very nascent. And so in addition to being fragmented when it comes to pools of talents, we're very fragmented when it comes to pools of capital. And we're also very fragmented when it comes to how capital is allocated. We're a bank-centric system in Europe rather than a capital market. So allocation of capital is largely through credit, 80% of it. And credit goes to creditworthy institutions, which very often have a proved business record rather than a great business plan. And so when we complain about not being part of the race, we have to not look at where are we have to ask why are we there?
Yes.
And we are there because we never made a single market for financial services. We're there because we never made a single market for digital services. When I travel from Frankfurt, where I work, to Brussels, where I go for regulation, my phone cuts out 3 times for like 5 minutes because I'm just crossing another border in Europe and telephone networks are still national. So ask yourself why you're not where others are. And you will find that it's fragmentation, it's the inability to create deep and liquid markets. And because talents have no time for all of that.
Yes.
I mean, my fintechs always tell me, yes, it would be great to do what I'm doing now in Europe, but I don't hold my breath. I want to move fast, and I can move fast and use the speedy highways in the US for funding. And so even if I work with a London-based fintech, they put a holding company in Delaware registered above that because the funding runs through the US market. And that is where Europe is failing. The only way through this is to get rid of fragmentation. And actually it's the same true. If I look at the G7,
yes.
If Europe is around the table, it's almost as large as the US and China in terms of economic power. But if you put 4 countries who are in the G7 in Europe, the UK, Germany, France, and Italy separately around the table, they're a fraction of what the firing power of Europe would be. And I think we've worked on this European program for many years. We just haven't arrived at destination Europe. And if you ask me anything I see, anything that is in the planning in Europe will move us forward, yes, but it will not close the gap to the US and China in technology and that. And that's why I think it's perfectly normal and legitimate for European startups to move into the US market. And we need to bring them back by entrusting them that they will find the same conditions in Europe, and we just haven't provided that.
Yes, I remember hearing you say years ago when I was just an Axel Weber fan and before we became friends, but I think you said something in the digital world where marginal cost of some of the banking service stack just kind of tends towards zero. Scale really matters. Yeah. And part of the challenge of fragmentation that we discuss constantly is not that it prohibits something that's already working great from continuing to work well. It's this decades later, you realize, wait a second, all the innovation is happening in the place where there's a large liquid market and very little is happening in the fragmented one.
Right.
So a few percentage points of growth compounding over that period makes the difference between are you living in a developing country or are you living in a G7 country?
Yeah, absolutely. And and you're right. What I said is if you look at mature institution and zero marginal cost, then basically size matters because there is no additional cost in rolling out your services over a larger number of clients. Whereby with smaller institutions, they just basically have a very high cost base. So within an industry like banking, cost coming down, technology evolving helps the incumbents and the leaders to lead that industry. But in the non-bank sector, the neobanks, those that don't have a legacy, have a huge chance as well, because they can use the same scaling, but they don't have legacy systems that they need to transform into frontier systems like distributed ledger, the whole decentralized finance space. You can scale much faster. And that's why, what we at UBS and other banks built over 150 years or more as a banking operation, these new banks like Revolut, Wise, built in less than a decade, with market caps that are staggering for a 10-year-old institutions. And now you throw in AI and generative AI, and you use code to write code. You don't, you roll everything out at even much lower cost and much faster. And that's where I think all of these startups are doing a great job. Their main challenge is to become global.
Right.
Global existing networks can throw that into the scale and say, well, look, our weight here is we actually can provide you with an existing global network. And that's why I think some of the smart things you've done at Visa is to team up with some of these new technologies and say, look, we're available to work with you. You don't have to sort of reinvent the wheel, but just use it in an intelligent way.
We've been talking about institutions, trust, and resilience in a multipolar world. So I wanted to bring in someone who helped build the international economic architecture. Ambassador Koji Tsuruoka, welcome to the Visa Economic Empowerment Institute Policy Sandbox.
Thank you.
Sir, you served the Japanese government for something like 43 years. So when I think about how much the world changed from when you joined the foreign ministry until today, quite a lot has happened.
Absolutely. I retired from the government in 2019, 2019, and the world has drastically changed from that time onward, even though it's just about 5 years. Most of my term, my work was during the time of the Cold War, when anything that might have gone wrong could have led to a nuclear war, totally disastrous and destroying everything on Earth. So there was tension, and people were very careful about not triggering anything that will lead to a nuclear war. And this led to a very ironical stability. Things were more static at the time, because taking any wrong move could lead to catastrophe. So you see this paradox. But in diplomacy, when these are stable, it also means future is quite predictable. So you have no surprise that is very drastic. And because you have to be very careful not to commit any serious mistake, you consult each other, not to be taken by surprise. And you also have lots of eagerness to share information, because you don't want to misread the situation. So people are cautious, careful, and slow too in taking actions. And this was the environment in which I had worked for 43 years.
You mentioned this kind of Cold War, balance of power, and then a populist wave changes things, and it happens very fast. Now, these changes have come with greater frequency, and it seems like uncertainty is the new normal.
Yes, this is the trap of success. The West, or the democratic world, the world based on market economy, has won over dictatorship, state economies, and Since that point onward, the world flourished, economy grew, not just among the Western democracies, but also globally. And what happens next? People became complacent. They had been happy, having had all the success in their hands, and became a bit bored of not being able to test or voice their discontent with the stability, which is really beneficial, but then boring at the same time.
Yes.
And one thing that I think had come up was I'm sick and tired of always being told to be preached. And this is not just among the developing countries, but it is also something that is flowing among the developed countries in Western Europe or in Asia as well. It's a kind of wakening up of identity that is calling to be recognized and then respected as being different, and not to be always told to be the same.
Well, we used to call it the Washington Consensus. The International Monetary Fund would tell a country, look, if you want to receive capital from abroad and you don't want to have a currency crisis, you should have this very prescriptive list of public policies. And if you do all those things, the markets will reward you, and we will gladly come to your rescue if things break and things go wrong. So there were still currency crises, there were still balance of payments problems, but the system more or less held together until it didn't. Then we entered this unipolar world, and now maybe we're entering a multipolar world. One of the areas from the Washington Consensus that was intended to help bridge the gap from the unipolar US-led post-Cold War system to this more multipolar world was free trade. And you were very instrumental in negotiating one of the most important trade agreements in the Asia-Pacific region, the Trans-Pacific Partnership. What was the motivation of the government of Japan in entering into a trade deal with such a diverse group of countries that included at that time the United States, but also many of the emerging markets in Asia?
This was a decision by Prime Minister Shinzo Abe. Although Japan depends very much on trade, especially free trade with other countries, especially the industrialized democracies, there's always a problem with the Japanese agricultural products that could not compete with foreign agricultural products in terms of price. And therefore, if you enter into a free trade agreement with another country that produces those agricultural products, the Japanese farmers will be threatened. Now, Prime Minister Abe was in the opposition after the LDP lost the election, and then a general election came in which Abe was leading the LDP, and he designed the manifesto that said never TPP. But in small letters it said, unless exceptions are granted. Nobody reads the small letters, of course. So once he became Prime Minister, having won overwhelmingly in the election, he started saying participation and success of TPP is a matter of life and death for Japan. Oh, huge change. And he was aware of that, but he also had these small letters in mind.
Right.
And therefore, he had to deliver that on the small letters, spoke to President Obama bilaterally, negotiated that the both would agree that free TPP doesn't mean total integration of the market. There will be conditions, we will have negotiation. It's not a condition for participation that you have to agree beforehand to eliminate all tariffs on all products. Yeah. So he was able to do that. The parties, the ruling party, the opposition party, the farmers were all opposed, continue to be opposed, even after the decision was made to join the negotiation. And this is a bit paradoxical because most of Japanese economy depends on having free trade with other countries.
Fast forward to the present day, some of the issues that you devoted your career to now really do seem to be really the flashpoints of this new geopolitical realignment. Mm-hmm. So you were working to remove tariffs. That was the point of the Trans-Pacific Partnership by and large. And now we have lots of tariffs, new tariffs every day. Sometimes they're added, sometimes they're taken away. Lots of uncertainty around tariffs. Certainly no consensus around free trade. The idea of there being some so-called Washington consensus, which really was just the blueprint for an international economic system based on rules, not based on might is right, not based on size, and even to some extent, if we're being totally honest, somewhat insulated from domestic politics. Mm-hmm. Now democratic accountability is coming back to the fore, and as you just said, if you ask people what they want, you might not always like the answer. They may not want what technocratic elites in the foreign ministry recognize as what's best for the macro long-term outlook. They may want something more short-term. Mm-hmm. It's also just very hard to explain some of these very counterintuitive concepts. Why should I have a trade deficit with you? Does that mean I'm buying too much from you and you're not buying enough from me? These are counterintuitive ideas. Mm-hmm. Part of what we do in the VEEI Economic Empowerment Institute is help explain that just because it's not obvious doesn't mean it's wrong. Just because it's not the most politically expedient thing doesn't mean that it's actually not a bad idea. And we are really working hard with your help to talk a little bit about why fragmentation, particularly of the financial system and of the payment system, but really of the entire international system, why that's somewhat problematic. And I have to say, I hadn't thought about it until you just explained it this way, but that long period of boredom, in macro we call it the Great Moderation, where the international system, the rules-based order delivered a certain modicum of stability, that is definitely something that is over. But while it was happening, you can almost say there was a bit of a benign neglect of the hard work of making systems more interoperable. Mm-hmm. The one exception to that rule when it comes to technology and payments was Prime Minister Abe's Data Free Flow with Trust initiative. Mm-hmm. This was actually, I think, something that did not get enough credit because it was really an attempt to say everyone can have their own national data regulation. Privacy is important in some countries. It's less important in others, but whatever you decide on a data policy, we can respect that, but the data can flow across borders as long as we have trust. Mm-hmm. That was such a powerful idea. Visa certainly supported it very vocally through the G20 and the G7 process. But I I feel like, in a way, that was the last gasp of this idea of creating kind of a bargain around regulatory interoperability.
Well, Prime Minister Abe, as I said about TPP, was committed to create a system that allows the best allocation of resources through competition, through free trade, and through freeing up all impediments cross-border. So he was aware that today data is the most crucial resource and necessary means to promote economic activities further and also efficiently. If you can't have a good grasp of facts based on all the available information and data, then you could be misallocating resources and choosing the wrong policies for implementation, which will again take a lot of time and resources to correct. But if you have free access to the data that is available, then you can certainly make a correct decision based on evidence, which is objective, and importance is it is available. So having a free flow of data, especially cross-border, is very important to ensure efficiency of economic activities. This reduces the unnecessary, burdensome bureaucratic procedures or allocating people to do unnecessary work. And then by the progress of technology that is also coming along very quickly,
Yes.
the data could be really be used as important ammunition for making huge progress, leapfrogging. That's why Prime Minister Abe was pushing this idea of data free flow with trust in G20.
Yes.
Not just G7. G20, the larger markets that are evolving. It's easier to have rules when there's no written rules beforehand.
Right.
So when you have a new sector of economy or any activity, first you have to identify what you like to create, and then you discuss, consult with each other, accumulate ideas, collect them, and then you talk about that and draft something that will meet the demands of everyone.
Yes.
You don't impose and you don't preach. And by the way, in TPP, we also made sure that data will be flowing freely with trust. And one of the specific provisions that we made was no requirement for servers to be domestically stationed.
Yes. Yes. Data localization.
Data localization is banned.
Ambassador Koji Tsuruoka, thank you so much for joining us in the Policy Sandbox.
Thank you very much, Todd.
That's all for now. We've got many more conversations in the pipeline. If you find these insights valuable, please subscribe so you can dig deeper into the forces powering payments in the Policy Sandbox. For more insights and practical advice from the Visa Economic Empowerment Institute, be sure to visit visa.com/VEEI.